Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's have a look on euro currency once again. So that actually the primary star of this week is definitely the gold. So actually things that we discussed in 2 days on the gold market now has been achieved, but we return back to this subject in a separate video today on the gold market. Speaking on the euro currency, here maybe activity not as strong as on the gold, but still we've got the things that we talked about yesterday and day before yesterday. So unfortunately guys, I'm a bit missed the personal consumption expenditures report. So yesterday I said that it should be released yesterday, but this was just gross domestic product. Consumption expenditures will be released today. So the importance of this report as a driving factor still stands on the table, just because the drop of the consumption and lower inflation, because consumption expenditures indicator is rather conservative, so it could also support euro currency, or better to say, make dollar weaker, which is could give the continuation to the pattern that we've got recently. So whatever it was actually some doubts that we've got yesterday, and why we in general in 2 recent sessions we called to stay aside from the taking any shorts. This was were some reasons. In the technical performance by itself, it was not very reliable from the first point of view because very slow. Second, at the point when the market shows this downside action, it has reached the area where it is not attractive anymore to make a bet on the pattern that we have right here. So that's why we said that probably it's better to wait and see what will happen. And now, right at this point, we've got the recent upside revision of the gross domestic product yesterday, and today also it will be the consumption. So we will see. Meantime, in the current moment, take a look, we've got really great looking bullish engulfing pattern on the daily chart. It almost reversal session, just 2 pips difference between the close price here, so 108 even, and the high of this candle, which is 108.02. It's just that 2 pips market missed to close to get the reversal bar. But anyway, overall action looks really impressive. So you can see we've got new low yesterday, and market returns right back up and close where it closed the top of the previous session. This is important. Maybe we should not speak about something really big, but together with some catalysis of the consumptions today, maybe we will get some continuation at least of this pattern. We're actually hope that it might become the starting point for something bigger, continuation, for example, of this thrusting action, right? But at the same time, if even it will be just minor continuation, also will be not as bad. Finally, what we could say here is that this probably could be treated in a kind of the bread and butter trade, although we can't call it in this way precisely. It's just because by letter, this is not the bread and butter by the Judge-Napoli framework and rules to identify this pattern, but let's call it as a momentum trade. So it doesn't demand from us any strict conditions for this pattern, but a major part still stands on the table. So what we have: great thrusting action, first retracement, and reaching of the 30% support area. Almost has been reached, just few pips, has not been touched for a few pips. So this suggests that this momentum still stands in place, and this pattern gets slightly more chances to show at least the some upward continuation here. As you know, the bread and butter target is the 618 resistance of the whole downside action. It's approximately should be around 108.80, 108.85 probably. So the potential of this trade is almost 100 pips, which is actually not small. especially for the intraday performance. So on the 4-hour time frame chart now, I do not see something really special. And I think that we here could focus precisely directly on the hourly chart. Actually, the performance that we discussed yesterday has happened. So wage pattern that we talked about, arguing about this overall action stands really slow, choppy. We said it doesn't look like the normal bearish market reaction. So, and we do not have yet the breaking of the low-lows tendency. So we have here, you can see, still low-lows holds. But the price action now is a break in this trend line that has been formed recently. If you remember, the wedge pattern was looking something like this, right? So it was the upper border, it was lower border. You can see it was has been broken. Yes, overall breakout and the style of the performance hasn't changed. So mostly it stands the same as the previous performance, but with all other factors that we just mentioned, and with the daily pattern in place, it has a bit specific and different background, right? And in the current circumstances, I do not see any problems to trying to treat it as in a way of the possible head and shoulders pattern here, with the neckline right there. So in fact, market right now stands somewhere close to the bottom of the right arm. This has been placed, so if you would like to take the part with this trade and well, participate in the release of the consumption expenditures today somehow with having the position, that might be the actually one of the scenarios that you could use if you like it. So I don't see any things to explain, because we're actually trading this kind of setups here for a few times in a week. So it's all the same story. So we have the hand shoulders. You could place stop either below the lows of the head or maybe slightly lower if you would like to save some funds and do not hide the stops right below the head. If you would like to, it also might be not bad idea to drop your time frame to the 5-minute chart and start watching here for a bullish reversal pattern. So once you have here the butterfly, double bottom, minor hand and shoulders, whatever, it might be the signal that led you to step in, and you even could place even tighter stops. All the same routine that we usually do. So but this hand and shoulders, supposedly, if it will go with this, target will be supposedly very accurate to the bread and butter suggestion, 108.70. It's agreement with the next fib resistance level. This will be minimum target of this pattern, and that's actually 618 level that I just mentioned on the daily chart as a minimum target of our momentum trade. So that in fact the only setup of the that I see here on the euro currency. So if you would like to do something, probably that's the only thing that we could follow today. That's probably enough from me for now. Let's see how market will respond on the consumption expenditures numbers and what will happen with this pattern.